Hey guys, hope everybody's doing well. Came in a little bit early because it's kind of an interesting day today. Hope you guys are doing well. I'm just going to go ahead and mute everybody, and then if you want to just let me know that you can hear me. Okay, just go ahead and type in the chat box there. I will share my screen. Okay, great. Good to see you, Donnie. Glad you could make it. Interesting day today, definitely. I took a short position on the YM at 25,143 this morning. I have kind of a mental stop at 25,176. So far, it's working out. But when I saw the numbers, especially on the supply demand numbers, it was just, it opened up down. And typically, when that happens, and the strength index was minus 12, when that happens, it's not going to bounce back. The market's just not going to bounce. And I took a look at Market Timer XL, and yeah, those numbers were really, really negative. So, taking a short position, any place, like what I did was I marked off the 5 minute bar, the first 5 minute bar here, and any place I can get in there, I'll just take it on a day like this. Hope everybody's doing well. Somebody asked me the other day if I trade options. I don't trade options. I do position trading. So I may have misunderstood their question, but I do not trade options. In other words, I don't take a position one day and then sell it the same day. I don't trade them like I do futures contracts or trade them like I do the spreads or something like that. I take position trades with the options, and so what I've done is I've taken a position, a put position. Last Thursday, I took a put position. It's up $1,400 now. I also did. I also sold some of the 252 calls for the August expiration, which is in just 2 days here. Just as the market opened, that's just it's just a no-brainer. When you have these market timer XLs like that, it's a no-brainer to sell those calls. So I sold 50 of those calls, and so today's a pretty decent day to do that. Yesterday was a great day to sell puts. It doesn't get any better than that. So yeah, market's really, really down here. I shorted at 25,143 on the YM. I've got my puts. I sold some calls, gamma scalping. It's just an absolutely perfect day to trade here. Absolutely perfect. How you guys doing? Hope everything is well. Market timer SD. Oh, let me show you yesterday. So yesterday, perfect little IBO right in here. Institutional buy order, very small one. It was only plus 15 when you take a look at this. Plus 15 on the SD, which is a small institutional buy order. Perfect little buy order here. Went long the NQ. Nice 50. Let's see, it was approximately 74 to 74.51. Nice 50-point move on the NQ yesterday. Really, really nice. I was not able to do the trading room yesterday, unfortunately. I didn't think I was really up for it. I had my daughter was visiting here from DC. She goes to school in DC, and I had to take her to the airport at like 4 o'clock in the morning, so I wasn't really in the best shape. I did some trading in the morning. I bought I got that NQ position on, and I rode that for a while, and then I went back to sleep. I was so tired. Anyway, I'm getting into her a little bit early. Those guys who join us later at 10 o'clock are going to see the video. Anyway. But today is definitely a negative day here. SD on the NASDAQ is still minus 18. The strength definitely heading lower. The YM is much weaker. And so what I do is I typically sell the weaker one. If the market's going down, I want to be in the weakest of the two, YM or NQ. I did not do the spread today. I just took a short position on the YM. In addition to the put position I have, and I sold the gamma scalping position that I have. So I'm gonna warm up my coffee here, and I will be right back. Not quite 10 o'clock yet. Yeah, this is not a day in which I would anticipate a bounce, especially when I saw this. We're reaching up above that 80% mark on the YMNQ. Yeah, we're almost at 87%. Volume is a little bit down here, but it's still pretty healthy for a decline. And typically, when you get that kind of move higher in the decliners and the volume, you're not going to get a reversal during the day. Can you guys see my screen okay? Okay, great. Hey, Eucharist, how you doing? Looks like the NASDAQ is really starting to decline here pretty severely. It was a little bit stronger than the YM before. Now it's really starting to get hit. Anytime the supply demand is below 10, that means institutional selling. And so it's unlikely that we're going to get a bounce here unless we get a big buy order coming in. When 10 o'clock comes around, I'll just give whoever came in as a recap of what I talked about this morning. Alex, can we short at current price levels? Today's a day where the setup was early in the morning, and if you're not prepared to if you weren't prepared, then it's probably not a good idea to short at these levels. And it's kind of too late. You need to be at that first 5 minute bar. You draw that. I typically put around some sort of marker on that first 5 minute bar, and then I take a look at the supply demand. Supply demand at that time was already down. It was minus 20 here. And so I knew it wasn't really going to bounce very high, and I got in at 25,143 short position. So, if you get in at any point here, look for a bounce first and make sure that the supply demand is still below 10. All right, well, it's 10 o'clock. I'll just do a quick recap then of what I talked about earlier. I got in a little bit early here just because it's kind of an interesting day. Yesterday was an interesting day too. Let me recap that. Yesterday there was the numbers yesterday on the Market Timer XL were pretty positive, and they stayed positive the entire day. So it was a perfect time to do some gamma scalping yesterday. There was also an institutional buy order here on this down bar on the NASDAQ right around 7,400. It wasn't a huge one. It was plus 15, which means it's not a large institutional buy order, but anything over 10 indicates a good buying, and there was no offsetting transaction. So somebody asked me by email that when I'm looking at SD, what am I looking for? Well, typically what I'm looking for is an offsetting transaction. So the day before we had some really big numbers, plus 133 and plus 38 here, but we had offsetting numbers, and this is a 5 minute chart and it didn't record those. But when I see a plus 133 and then I see a minus 133, then there's really nothing to that. You really shouldn't take a position based on that. So you really have to watch it at the time that spike happens. It's being recorded on a 5 minute chart, and so you can go down to a 1 minute chart, but sometimes these offsetting orders happen so quickly that they don't get recorded even on a 1 minute chart. So you have to watch it visually. Well, yesterday we had an institutional buy order plus 15, which is over 10. So I knew it was an institutional order, but it's very, very small. So my guideline is basically anything over plus 10 is an institutional buy order. And so that happened on that down bar right there, and we immediately got a nice 50-point move on the NASDAQ. So I took that long position yesterday. Also, yesterday was a perfect day to sell puts on the diamonds and on for gamma scalping. That was absolutely perfect. So today, of course, we started out we're down significantly. Supply demand immediately declined below 20. Supply demand immediately declined below 20, and at that point I knew institutionals were coming in with sell orders. And when that happens, you want to take a short position. So the first 5 minute bar here was pretty small. We bounced a little bit higher. I took a short position at 25,153, or I'm sorry, 25,153. I didn't have that set right. It's 153. Close enough. And so I took a short position right there, 25, 153. And because supply demand was still below 20. And anytime it's below 20, you're talking about institutional sell orders coming in, that is not going to bounce much higher. And so good position here on that. I also, because I saw the Market Timer XL coming, the number of declining issues and the declining volume here was above that 80% level. I went ahead and I sold calls, the 252 calls on the diamonds. Really, really nice position there. The other thing I talked about was the fact that I had a put position here, just a couple of puts, going back last Thursday. And so as soon as Market Timer started saying, "Hey, you guys, we're getting at critical levels of MT volatility here," I went ahead and bought some put positions, just 3 here, but I'm up $1,500, and every little, it's something that I can hold overnight. I'm not going to sweat about it. I'm not going to worry about it. And so those put positions have generated, a nice $1,500 profit since last Thursday, less than a week. So that's a nice little extra there, I guess. Anyway, that's a recap of where we are today. Supply demand here continues to be really, really weak, minus 23 on the New York Exchange, and indicating that their institutions are in selling today. And the NASDAQ is minus 29, and the Strength Index is minus 31. So everything is extremely weak here, very, very weak. Good morning, guys. Yes, I sold calls today. You'll see it on the video because I started the video a little bit early. And so I went ahead, as soon as the market opened, I sold the 252 diamond calls here for the August expiration, which expires on Friday, the nearest expiration here. As soon as they open, I sold them based on this. I saw this, I knew that as soon as I saw Market Timer XL above that 80% level, that red line up here, I knew it's not going to bounce back. This is a down day, and it's going to stay down. Those 252s are still going for about 50 cents. So it's not a horrible, I think it's probably a pretty good play, but I would wait for a little bit of a bounce here. We might get just a little bounce. We'll see. Doesn't look like it's bouncing very hard, but if we get a little bit of a bounce, then I would definitely get into it. I wouldn't get into it at this level. We eventually might get a little bit of a bounce, but I don't know. The time to do it though was early this morning, right at that. As soon as that 5-minute bar opened, and you started to see that the supply demand was down 20, minus 20, and so at that point that those are institutional sell orders. Then for sure that's like the perfect opportunity to get in. And when you saw Market Timer XL open up, that's minus 80% on the declining issues. That's like money in the bank right there. I keep forgetting where you're going here. So you really need, if you know the kind of day that you're going to have, kind of the setup that you're going to have, then the time to do it is like really, really early, before the market makers come in and they see that, hey, this thing is not going to bounce. Lots of institutional sell orders are coming in, and so they'll just erase that premium. They'll just take the premium right out of these things. And so let's see, I'm up 1850. The theta on this is 540. So I'm exiting those positions right now. Let me do that over here. Make sure I do that on my account. There we go. So yeah, that was a really nice little extra. Like I said, also I put the puts in last Thursday because Wednesday night Market Timer just said that hey, these MT volatilities at critical levels, this market's going to decline, and so I just put a little put position on here, 3 of those. And those are kind of things that it's just extra little money, but $1,500 for the week is it's decent. How often does it open at plus or minus 0.8? When volatility is high, it opens up a lot like that. So we get these days in which, like yesterday, there was a snapback. It didn't quite hit 80%, but anything above, like 70 is pretty strong, is pretty good. It came close last week. I would say, I don't know, it's hard to say, but probably out of 20 trading days in the month, 21 trading days out of the month, you'll probably get half of those at that level. And if volatility is picking up, volatility is higher, then you're going to get it every single day. Once the VIX hits 20, you're going to have it almost every single day. That's why traders love volatility, because you're going to get those kind of days where it's not going to bounce. It's going to be at that plus 80 level all the time. You trade those at the open most of the time. Yeah, when it comes up here to that 80 level, that's the time to get in. On a normal day where it's not really clear if it's going to go up to the 80 level or not, it just kind of hangs around 50, 60, maybe up to 70, then typically I wait the first 15, 20 minutes to kind of see where it would actually, start to trend. And then at that point, I'm going to look for institutional buy orders. So if you didn't see this before, there was a really nice small little institutional buy order yesterday here on the NASDAQ on this down bar, and we got a nice 50-point pop on that. Sure, no problem, Donnie. Would you see the Dow 25,000 key number as key support? You know what? Since I started using supply demand from Market Timer, I don't even look at those kind of levels anymore because they're almost meaningless. I think a lot of people look at key support levels and they think there's some magic to those. I'm not even interested in technical analysis anymore. Almost everything I see now in the market is really, really clear to me that institutions basically either they're coming in, they're buying, or they're coming in and selling, and that's the only thing that's really moving the market. And so if institutions start buying at that 25,000 level, like maybe here where they did on the YM, let me see what the Dow is. Let's see if I got a chart of the Dow here. We're 2539. So So, I mean, if I see some institutional buy orders come in, then yeah, I guess it's support. But that's basically the only thing I'm looking for. I want to see, if there's institutional support there at that 25,000 level, then yeah, it's going to bounce. If there's no institutional buy orders at in that area, then it's not going to last. It's gonna come back down. It's it's just gonna you're just gonna cut right through it. So to me, I don't think there's any magic in those numbers. I want to see that supply demand number. That's all I'm looking for. I mean, really, the supply demand from Market Timer is it just since I started using it, since they developed the script for the for the Nasdaq and the NYSE. It's really opened my eyes to how the market moves. I knew it was, I mean, it's really supply demand. The market moves based on supply and demand. I mean, if there's more buying than selling, the market's going to go up. If there's more selling than buying, the market's going to go down. And retail investors, from what I can tell, they're typically the supply demand number, if it's under 10, it's all retail investors. If it's over that, if it's really, really big numbers, then it's institutional orders coming in. And you really want to follow the institutions. Yeah, exactly. You got more buying than selling, and the institutions are the ones that can move the market. They're putting in millions of dollars, or they're taking millions of dollars out. They're the ones moving the market. Retail investors are really, from what I can tell, now that I studied the supply demand number, they don't really move the market. I mean, they just, you can't follow them. Um, yeah, absolutely. Yeah, so even though Market Timer XL can give you a general idea of what's happening, it wasn't until the supply demand algorithm came out that I started tracking institutional buying and selling. Um, and that's what's really driving the market. So it looks like we got a little tiny bounce up here, and we're starting to sell off again. Both supply demand and the strength indexes are still down. There's no real bounce here at all. A little bit on the Nasdaq here, but it's still below 20. I mean, we're down, what, 280? 280 on the YM, and the Dow Cash is down 275. Nasdaq's getting hit really hard, down 114. Typically on days like this, you'll see the market kind of consolidate. When you get a big down move like this and it doesn't bounce, then you're going to see the initial decline, and at some point we'll probably go into some consolidation phase through the mid-session, and then maybe a little bit of a bounce at the end of the day. Or a day like today, though, we could see acceleration of the selling going into the close. Keep an eye on the supply demand number, because if that continues to decline severely, especially into the close, we could see another 100 points or maybe 200 points on the YM being taken out. Terry says sometimes Market Timer XLSD will pop upwards and Market Timer XL pops downwards. Yeah, so the strength in the supply demand index, they need to be going down together in order for me to be confident in the position, if I'm going to take a position, or if I'm going to be doing something else, if I'm going to be long or short. When they're opposed to each other, then I stay out. And what happens is the way I interpret that is that there's the supply and demand is actually the amount of buying or selling coming into the market. The strength index gives me an idea if the move that's being made is either strong or weak. So right now we can see that it's trending downward, which means that the price action that we're seeing in the YM here is very, very weak. And so these are two different indicators. One is based on the actual amount of volume and the actual amount of sell orders that are coming into the market. And sometimes we can get a sell order in the market, but the strength of the index, the strength of the price action indicates that we're going to see it go up. So if the supply and demand, especially if it's under 10, means that retail investors are coming into buying. And if the strength index is pointing down, I would not follow that. But if I've got a strength index that's down and I've got supply demand that's down, then you've got a recipe for a really weak market like today. And if they're both going up, then, and I see institutional buy order coming in and the strength index is coming in, moving higher, then that's a perfect opportunity to go long. Does that mean absorption? I'm not sure what you mean by that. You mean the market's absorbing the buy or sell orders? Okay. Yeah, pretty much. I mean, when it's below minus 10 or between minus 10 and plus 10, then it's just the market makers maybe taking the other side of retail investors, or there's just existing orders in the market that are going to absorb that number. And so we might see a little bit of strength in the SD, but the strength index is declining because it's still weak or something. So, I mean, like right now, we're probably seeing some retail investors coming in, trying to buy this dip or something because they think the market's going to go up at this point. And so we get a little bit of a pop higher here in the SD, but yeah, it's not gonna work. Unless we get a really sharp pop up, then it's not gonna work. Sure, no problem. So we're still down 270, 278 on the YM, 277. Cash index is still down 268. But, unless we see, like, over the past several weeks, we've been watching the SD, drop to, I saw a couple of times it dropped to minus 1,000, minus 3,000. So there's a lot of institutional sell orders coming in over the last couple of weeks if you watch Market Timer SD. Some were offsetting transactions, so we had minus 1,000, then we had a plus 1,000. But for the most part, some of them were minus 3,000 and some were only plus 1,000, so it was net minus 2,000. Really hard to capture on a 5-minute chart, but if you're watching it and you pay attention, you can you can kind of figure out the volatility is going to start picking up, and you can take positions ahead of time. So if you see a lot of institutional sell orders coming in, it doesn't. Somebody else asked this question too, which is kind of interesting. a lot of times, so for example, if you see over the last couple of weeks that you see a lot of really strong minus SD numbers, but the market doesn't start going down yet. So institutional sell orders are coming in, and market makers have absorbed that, and specialists have absorbed those orders. And then what they do is they kind of wait until they hold those orders, and then they have to unload those positions over time. And that's why it takes time for the market to eventually decline, so market makers and specialists can cover their shorts from the institution. So they don't do it all at one time. Otherwise, the market would just like fall apart. Specialists, part of their duties for the NYSE is to create orderly markets. And so what they'll do is they'll take those institutional sell orders that have taken place over the last week or so, or 2 weeks, and then eventually they start to settle those positions and sell off the positions that they're holding for them. And so that's why it takes time. You can see what's coming, but it takes time for those orders to actually be executed and the specialists clear out their books. And so that's the perfect time to do a put position, like I did last week, to start to, create a, longer term positions, swing positions really in the market. Is the MTSD indicator same as the MT supply demand index? No, it's not. It's in the supply demand index in the Excel file column AA. Column AA. Let me check. Yes, it is. It's the same. It's the same as the supply and demand index. So yesterday, the supply and demand index ended. This is end of day data. It was a +7. That's exactly. I think that's exactly what it was on. And it ended yesterday. Let me see. It ended at It was just about +7. So yes, it's exactly the same thing. Only it was 7.41 or whatever. So it's exactly the same thing. The only difference is that instead of updating the spreadsheet, manually during the day, we actually get the numbers now in real time on the TOS platform. So it's been a huge help. But the algorithm is exactly the same. Same thing with the strength index. The strength index on the Dow spreadsheet is this one right here, the AV column, and that is the exact same algorithm as the strength index here. Yeah, so this is starting to decline. Around 290. I don't know. There's the potential here for the market to really, really decline significantly. I mean, when you took a look at the numbers yesterday on the spreadsheet, you could see that the AVS was really, really low. We had the swing signals actually worked out really, really kind of well. It stayed down yesterday, even though the market was up 112 points. But we've got red across the pipeline. We had bullish herding yesterday, but it looks like that's going to turn out to be an orphan. I like the language that they use. it's going to be an orphan. It's just going to be all by itself right there, and then the bearish herding is going to continue to take over. Yeah, so we got more institution, and the selling here is pretty consistent with a continued down market. Yeah, now we're down 300. Euchre says, I found it also helpful putting the UVOL, DVOL, ADV advanced decline in the monitor tab watch list to see the numerical values. And the percent changes moving. Okay. Yeah, anything like that. So, I mean, when I did the I do this a lot. So today is like a perfect day to do that. So I got UVOL, DVOL up here. I got advanced decline. I do take a look at it once in a while just to kind of see, especially the trend of the volume, the up volume, down volume. Is this what you're talking about, Eucharist? Using the UVOL, DVOL, ADV, and the advanced declines. I mean, if you're day trading, yeah, this is really handy to have. Yep. Yeah, I still use it. I still pull it up. I take a look at it once in a while. Absolutely. That's what most of the algorithms and the Excel is based on. It's based on those 4 internal indicators. It just takes a really deeper look at them. Yeah, so you get a better sense of, especially with the supply demand index, it tells you, it gives you those institutional buy and sell orders in there. It's really pretty amazing. So let me see what I got here. I got out of my calls that I did this morning. The ones I sold. These puts, I'm probably going to get out of those fairly soon. They've only got 2 more days to expiration, and I don't want to hold those because they're American settled. So I got to exit those sometime by the end of the day tomorrow, but we'll see. I'll probably exit those today. The NASDAQ is getting really, really weak here. That's one thing too. I think in yesterday's update, where is it? That's the old one. Here's one from last night. MT vol and the Nasdaq remains high at 103%. So yeah, so basically they're saying that the Nasdaq is much weaker here than the Dow, and it's down 1.85%, almost 2% today, and the Dow's down 1.17. So that's why the spread, the YMNQ spread, is really, really expanding here. What delta? Both of those 265 puts mark as 15. Yeah, the delta on those was like, if I remember, it was pretty big. I'm not going to get back into those, but I'll just go ahead and take a look. But the delta on the 50s, I think it was pretty high. Let me go ahead and I'll sell. This is my paper trading account, so I'll just go ahead and sell these again, just to see what that is. Yeah, delta was minus 1,000. Theta was 502. So, I mean, even if it just like moved sideways, I would have made $500, but I ended up making $1,700 for the day. But the delta was minus 1,000. So between the delta at 1,000 and the theta at 500, that's like 1,500, 1,600. So when I had a $1,700 profit here, I just exited the position. I mean, that's about. I mean, I suppose I could have run it down a little bit more, but I don't know. It was pretty. I thought it was a good time to exit. By the way, I am. Somebody else asked me this, but I don't actually use Thinkorswim to trade. I just use it for the indicators. I use Lightspeed Trading for my futures contracts, and a cheaper broker for my option contracts. I just use Thinkorswim because for the indicators, basically. I'm referring to the +3. Oh, the long, yeah, the long puts. Yep. The delta on those. Let's take a look. They're minus 299 right now. Minus 300. The ones that I bought when I bought those, they were at 0.80 delta. You call TD if you have LLC, you have to pay professional fees. Yeah, I think most do now. If you have an LLC, they assume that you're a professional trader. I like Lightspeed. They charge $325 a month for the data, but it's so good. The data is just awesome, and their executions are lightning fast. Yeah, so I don't actually use TD Ameritrade to trade anymore. I just use it for the indicators. But I mean, if you have an LLC, although the data fees are deductible, so against your income. But I had an LLC set up with TD Ameritrade when I first started. That was like 7 years ago. They didn't charge me any fees. But I guess they must have changed their policies. So we're getting a little bit of a bounce now on the NASDAQ, but the strength index is still indicating lower, and the supply demand is still minus 23. So, if you're day trading, this is kind of where you want to start to look at maybe adding to it, or at least establishing a short position. Not quite yet, but you kind of want to see it kind of flatten out here. And as long as the supply demand index is still down, strength index is still down, then it's a relatively decent position to be in. Yeah, so Market Timer XL right now is saying that, hey, this is a down day, a little bit of a separation here between the declining issues and the volume, but not severe. So midday after, that's 10:39 now. So midday right now is it's consolidation period. Typically, there's a little bounce back, a little consolidation here. And I probably am not going to pay attention to the market the rest of the day until about probably around 3 o'clock, because I want to see the close. So if we get a consolidation in here and it just kind of moves sideways, and then I'm going to be watching for a sharp decline at the close as long as the supply demand is still down. Strength is still down, especially if it's below 20. That's what I'm going to be looking for. If we're above 20 on supply demand, then we may see a little bit of a bounce higher and not close at these levels. So, the whole midday market is something that I have never had success trading in. It's just kind of very random, and I never have a really good feel for it. The beginning of the market, especially on a day like today, I like to get in the first couple minutes, especially with gamma scalping or day trading. If it's just a normal day and we're not reaching these levels on Market Timer XL, then I'm going to wait the first 15-20 minutes to take any trades on the futures contracts. Looks like I don't know if you can hear the machinery in the background, but it looks like somebody's having a tree taken down. Yeah, so these puts right now, let me take a look at these. When I do position trading with options, I typically buy around an 80 delta. So when I bought these at an 80 delta, they were at $10. I think I bought them at $10. Oops. 975. Okay. So yeah, with the 300, the original price was 975. It was an 80 delta in the money, and those are kind of things that especially if you pay attention to Market Timer, and they're saying, hey, empty vol is getting at critical levels, this market's going to start declining. You throw a couple of those on there. Real simple, no chance of being assigned. You can sleep at night. You only got 3 of those on there. And if you wake up, and one of the reasons why I take positions like that is you wake up in the morning, like today, and the market is down, a couple hundred points. Trading a futures overnight contract like that, unless it's a spread like I do YM&Q, but if it's not, then you could get murdered in the morning with a short futures contract if it goes against you. But with a couple of put positions, it's who cares? It's not really going to kill you, but it adds up. So, and when you're thinking of your profit targets for the month, the extra $1,500 in your account, it's nice. It's nice to have, and you don't have to worry about it. You don't have to, you can sleep at night. So think about doing that though if you haven't done that. Even if it's only one contract. From which site Strong Market Timer derive the key inputs for the XLS files? They get a direct data feed from Bloomberg. They have a Bloomberg terminal, so that's where they get them. But what happens is they try to get the Excel spreadsheet out early, and so what they do is they'll update the spreadsheet at around 5:30, and then they'll check it again later in the night. But the one that I recommend, which everybody should be looking at anyway, is the Wall Street Journal site. Because what they do is these are the numbers that they're pretty close to what they're using, but they update through 8 p.m. and those are the ones that you should be using. If you want to wait later, the very best data that comes out is from McLean Publications. They do the NYSE here. They don't have the NASDAQ, but they do have the NYSE data. And that's really, really clean data. Very, very good data. Nah, I wish there was. That's why, if you don't, you really should read the user guide really, really well. And I update the spreadsheet myself using, because I don't have a Bloomberg terminal, I'll use the Market SJ site. So I'll use this site at 3:45, and I'll update the spreadsheet, and I'll take a look at it and see what the numbers look like. I mean, if I see bearish herding, if I see some of the other setups are a bull trap and a bear trap, and I'm looking at the strength number and I'm looking at the final supply and demand number. And one of the things that they did the other day was they said, hey, on, what day was this? That was yesterday, or the 13th was Monday. They said there's a potential for a snapback. And so if you updated the spreadsheet yourself and you saw that number under the price anomaly was over 100, you would realize that the potential for the market to go up the next day was pretty high. And so you could have taken a call position, an overnight call position, just buying in the money, 80 delta or better call position for the potential for a snapback, and that's exactly what happened. The market was up 100 points. So if you read the user guide, there's a number of setups that are more reliable than others, and so if you update the spreadsheet at 3:45 like I do, then you can pretty much get an idea of exactly what's going to happen the next day. But read the user guide through and through, and if you have any questions about the user guide or the setups, especially for the next day, which ones are the best setups? Typically, the bull and bear traps are the best. The snapback using that price anomaly column is really, really good. Otherwise, I just take position trades and, either go long or short, call or put options. But, you can't, it's hard to, especially with an overnight move like this, it's impossible to catch it using futures. It's really tough to catch it. And then if you do, let's say you went short last night, you have no idea what happens, especially when the Asian market opens at 3 o'clock in the morning, unless you want to stay up all night and do that. I don't. I like my life. I trade a couple hours in the morning and I'm done. I enjoy myself. Especially if I go on vacation and stuff like that, I can put position trades on and just let them go. So that's why options kind of help with that. I don't day trade options except for the gamma scalping stuff. Yeah, Donnie. Yeah, no problem. Yeah, so take those position trades, update the spreadsheet before 3:45, read the guide, make sure you know what the best setups are, and you'll do well. You'll do very well. Yeah, I need my beauty sleep too. I didn't get it last night though, because I think I mentioned earlier when I got on that I was up at 4 o'clock in the morning to take my daughter to the airport yesterday, and it just kills me when I have to get up that early. Really knocks me off my balance here. I ended up taking a nap in the afternoon yesterday. Ugh. But yesterday was really easy to trade. Yesterday was a piece of cake. Today's really nice too. Today's a good day. All right, guys. I got on a little bit early today, so if you guys don't have any other questions, I'm going to kind of wrap it up here. But, when you saw supply demand down below 20 this morning, you knew this was going to be a day that was probably not going to bounce. There are days, though, in which, and this happens quite frequently, the YM futures are down like 150, 200 points, and in the morning, and then it'll bounce right back up. It won't stay down 100, 200 points. But today, it did stay down, and the reason for that was the supply demand was down below 20, just about at the open. It bounced a little bit higher around 17, 18, but you knew it was going to be a rough day when that thing stayed down. Just to be sure you update Excel file 3:45. Yes, I do. 3:45 p.m. Eastern Time, 15 minutes before the close, I update the spreadsheet just to see what's going on. If there's a particularly good setup that day, did I close that out? No, here it is. So if I see a particularly good setup, like Monday, I saw that there was a potential for a bounce back in the price anomaly column. That was 104. I took a call position and closed it out yesterday. So you want to kind of pay attention to those things. Absolutely. All right, guys, have a great day. And I'm going to do yes, we're going to meet tomorrow. Like I said, I had to take my daughter to the airport yesterday, so I couldn't do it yesterday, but I'm going to do it tomorrow. Yes. 10 a.m. See you guys then. Have a good one. Bye. You're welcome, guys. Bye.